Welcome to Executive Conversations by the Paypers. I'm Dwayne Jeffrey. In this episode, I'm joined by Manpreet Haer, the CEO and co-founder of PayFuture. We're looking at how PayFuture enables merchants to reach customers in emerging markets and what it takes to make payments work across hard-to-reach regions.
Thank you very much. Glad to be here.
Perfect. Let's start with the basics first. For those who know about PayFuture, what is it that your company actually does?
So PayFuture is a payments company. So we help online businesses with payments in emerging markets. That's what we do, whether it's payment acceptance, whether it's cross-border money movement. We try to ease the pain of emerging markets and make it simple to either accept payments or move money cross-border. That's what PayFuture does.
Perfect. When you say emerging markets, right, for everybody that might, have a different view of that, which type of markets are you referring to?
Good question. So the countries that we look at are very much developing countries or close to being a developed country. So why are we looking at those kind of countries? Very high population. So it's a natural for any company to want to go in there, tap up the local consumer market, the local business market. So those are the kind of countries we go into. I wouldn't say we're in every single emerging market because we're not, but the countries we are in, we do try to concentrate in highly populated countries that are not necessarily developed like Europe or the US in terms of their infrastructure, especially payments, but are up and coming. And that's a sweet spot that we try to hit. So that's where we're looking at in terms of emerging markets.
Fantastic. And as a founder, of course, you can build any type of company you want. But what made you decide to go build a payments company that's focusing on those emerging? What's the gap that you saw that others might not have seen?
Yeah, I mean, that's what it is. I think every business, you're solving a problem, right? So every successful business solves a very big problem. So for us, what was the actual problem? Emerging markets are very difficult to navigate. There's legislation, regulation, sometimes red tape that you have to get by. So when we look at these kind of pain points and make it easy for any type of business to maybe go into those markets or be successful in those markets, then we're solving a problem for them. So that's what our business has always been from the get-go. We identified a few countries where we could do that, and we started with very simple things and make it nice and easy. So if, for example, a European or a North American company wanted to go into some of these emerging markets, for example, how can we make it nice and easy for them? So how can we remove all this red tape, this bureaucracy, and make it nice and easy so they can tap into the market? That's what the first steps of PayFuture was.
Fantastic. So let's imagine, right, a business wants to go into one of those developed markets, either pay their suppliers or the other way, try to get payments out of customers in those particular markets, like in Nigeria, Pakistan, and Argentina. What actually breaks down that transaction? So why don't we just use the traditional rails that are out there? What are you doing that's different?
Yeah, so what we've seen in the past shift, for the last few years is different, where you've got, let's say, for example, stablecoins. But before that, it was always money moved on the SWIFT network. It took a long time to get from point A to point B, and especially when you talk about emerging markets, extremely difficult to do that. You have to go through various steps in order to even achieve that at the get-go. Very expensive. So these kind of things are what we're looking at, so that's the traditional route of money movement. And companies have always been using these routes, right? And sometimes they may not even think it's broken because, waiting 3 or 4 days for them to receive their money may seem normal. But there's loads of other issues that come with it, money getting stuck at intermediary banks. That happens quite a bit as well. You don't really have visibility of where the money is. So even though these are the traditional routes, and these routes are still being used today, it's not like the whole world shifted already. Yeah, it hasn't. These routes are still being used today. So people can use them and people are using them. But what we're trying to do is make that shift to make it a lot easier for them. There's different ways of moving money now. There's different ways of even accepting money. So if we can make it easier for them, then we add value to them. So there is traditional routes that people are still using.
Yeah. And especially in those markets, right? I mentioned Nigeria, Pakistan, Argentina, and when I'm thinking about emerging market, oftentimes I think probably people think about the volatility that comes with that. Currency swings, getting hold of just local dollars and liquidity on the floor, but also speed and cost, as you already mentioned. What are some of the pains that companies are trying to solve for, and how are you solving that?
Yeah, it's a very good question again, because what you have to look at is every country has different rules, different regulations that you have to navigate, right? Whether you're moving money into a country or whether you're moving money out of the country as well. So what it is, you have to look at, you can't just bundle each country together and this is a solution for everything. Every country has different rules, different regulations, different compliance that you have to abide by, right? So, I mean, you mentioned Argentina. Argentina is a very complex market when it comes to moving money out, and we don't move money out in Argentina because it is so complex and the tax is so high. But countries where we can, that's where we add value. We use our own huge liquidity pools that we have, so you don't have to sit your liquidity with different banks, for example, because banks have are dealing with loads of organizations that want to move money into a country as well. So if we sit within our own liquidity pools there, so even with money movement, which we call left-hand side, into a country, it's quick, it's very fast. There's two routes that we use. There's stablecoin route that we can off-ramp within country where it's allowed. We do that. That's instant. When you start and when you finish the transaction, you can see it's on blockchain, right? It's instantly converted to fiat because we're using our own liquidity pools, right? So these kind of things from that side, speed, cost, is cheaper, is faster. Why would you not use it? So this is a solution for money movement into a country, out of a country where you can do it. It's a huge selling point. You need the right licenses, you need the right compliance, the right regulation, and that again, the traditional route is long, it's fast. You have to go through certain points where you have to get that checkpointed. But with us, it's extremely fast. It's quick. Using stablecoin, using USDC, for example, to move money out. Some companies may not want to touch crypto. A lot of companies are like that. They don't say, look, it's not our policy is not to touch crypto, no problems. Then crypto, stablecoin, for example, is used as a rail, instead of Swift. So you start with fiat, you end with fiat, but the part in the middle is extremely quick. So you're saving time. So if you save time and money with money movement, we're just seeing the start of this, So remittance companies, we're seeing a lot of organizations utilizing stablecoins that are within the payment space. But what we'll see moving further down the line is infrastructure. If they start utilizing, which it will be a natural process, they start utilizing this, then you'll see a lot more money movement quicker, and that will be fantastic for people's cash flow as well, the balance sheet, getting money quicker. So commerce can move a lot quicker as well, world commerce. So there is a lot of upside with this. There's a lot better ways of doing things than the traditional way of banking and moving money.
Absolutely. You already mentioned that stable coins, I think currently, doesn't matter which conference you're at, are probably one of the most talked about things in payments. And I think that there's a lot of hype around it, but also there's actual practicality. So what you mentioned of actually moving that. But for those who are not as familiar with it, right, what is the real problem that stablecoins are actually solving that's different from the older ways of moving money across borders?
Yeah, good question again. The traditional money flow, the currency, the world currency is US dollar, right? So if you move from let's say exotic currency, you need to move to US dollar. a lot of currencies are pegged to US dollar as well because it is the world currency. Now, with stablecoin, let's say, for example, USDC is pegged to US dollar as well. So it's still in line with what's happening in the world, right? It's the world currency. So stablecoin is basically on the blockchain. It's normally pegged against US dollar, but every country has their own stablecoin as well. So they may have something pegged to their local currency as well. But mainly, the majority of the time, it's US dollar based that people are using globally. And what it is, like I mentioned before, it's on the blockchain, so you can see it's visible. You can see when it started, where it finished. So this is the simplicity of stablecoin. Yeah, it's a buzzword, but it's a buzzword for a reason. People need to use it. It needs to be utilized. But I think what I just mentioned before is that if you don't want to use crypto, that's fine. There's other ways of utilizing it in a very productive manner as well. So that's basically the very simple low down version of just what stablecoin is.
Absolutely. So I think critics might say, why don't we just speed up current existing platforms, because the money's already moving there. Oftentimes, indeed, it might take 2 or 3 days, but why don't we focus on speeding that up instead of going and using a whole new platform? What would you say against that?
What do you mean?
So let's look at the Swift rails, right? Or in the UK, for instance, you have Fastnet. In Europe, you have SEPA. All of those are instant ways of moving money.
Yes.
But then indeed, in those markets that you're mentioning, it might still take a long time because some of those local networks don't exist, but they are fiat in, fiat out, right? No need for a stablecoin in the European market, in the UK market. But we're now utilizing an entire new network, an entire new stablecoin to actually move that money in, well, sort of like that sandwich, right? Between fiat, stablecoins, and fiat back out.
Yeah.
So a lot of critics might say, hey, why don't we just speed up the existing networks? Why don't we speed up Swift? Why don't we duplicate what's in the UK and SEPA and bring those into those other markets?
Yeah, I mean they're right as well, but you can't do it. It's impossible, right? So SEPA, like faster payments, is a local UK payment option, right? That's what it is. Now, if, let's say, for example, India wanted to have their own, they have IMPs. They have the system is trying to do the same thing, but they're two completely different systems, right? So how to actually merge them together is why we're talking about stablecoins, So these are very good systems. SEPA is a fantastic system, right? Faster payments is a very good system. But like I mentioned, that's why we're focusing on the emerging markets. Sometimes they may not even have these systems, you see. So it bridges the gap between all these different systems. That's what it is. You can't, it's like saying, well, we had euro here in Europe, but the UK said, we want to stay with pound, for example. That would have been easier for everyone to use euro globally. Everyone have one currency, yes, but it's not realistic, is it? So it's the same with the payment systems as well. Although that theory is good, the practicality of it's not there. It's not going to happen. So how do we use that theory and get it into practical? And that's where this comes in, This is like answering that question. So the critics are sort of, I wouldn't say the critics, they have good theory, but in reality, it's not doable.
Okay, fantastic. Whenever you move money across borders, right, like it goes from one country, lands into another. And like you already mentioned, there's several networks involved. I might use UK faster payments or a SEPA transaction, and then it goes on to another rails. How does PayFuture actually decide which one given payment takes and why that matters?
Number one, it depends on the country. It depends on what you can do, what you can't do. We only go into countries where we can do certain things, right? Some countries, they don't like crypto, they don't have any legislation for crypto. Okay, no issues. For example, India, with the FIU, registration for digital assets, you can on-ramp, off-ramp. That is something that they've put in place. Very forward-thinking governments like that, they have these kind of ideas in place, but they need to make sure that their currency is protected. They need visibility on everything as well. So look, from our point of view, it's like we have to go to every country and look at what problem are we solving. Number one, can we actually solve that problem? You're right. Moving money into the country is very straightforward. You know, a lot of people can actually do that. But how do we do that faster, quicker, cheaper? Right. And the other way is like, okay, if we're trying to move money out of the country, number one, can we actually do it? Number two, what legislation, regulation can we use in order to do that? And if we do that, how can we make it fast? How can we make it, quicker? How can we say to the merchant, you know what, you'll get your money in this much time, instead of waiting 30 days for your money? This is something that we'll implement. So it's us working as a team, working within PayFuture to say, look, this is the issues that we have, what we're solving for. Every product that we have, every solution that we have, it has to be solving a problem.
Yeah.
Otherwise, we don't actually do it. There's been many good ideas that we've put to one side because they're not solving a problem. So this is what we look at and this is how we get to our solution, basically. There may be some countries where we don't come to a solution, fine. Then we don't do those countries, So this is our way of working. This is how we come up with this.
Absolutely. And of course, there are some of the largest networks in the world who are all spending billions of dollars on trying to essentially build what you're currently building, right? What would you say to those who are either investing in that or trying to build those versus what you're building? Why are you more effective, or why would your solution outpace them?
Yeah, very good. Again, this is a very important question. For us, look, we're completely bootstrapped. We started this organization, me and my founder, Zaki Farouk. We founded it on the basis of we're just solving a problem. Now, we had to basically, the simple things of getting servers, etc. This is what we had to do at the beginning with our own money, not huge amounts of money, but making a very simple system and making it work for our first merchants and building on top of that is what we've done from the get-go. And we've managed to scale that up without any external investment. Whatever we got in terms of profit, we put back into our organization. Now, why did we do that, and what outcome did we come to? Is that because we had to be very conservative of where we spend our money. We made sure we spend it wisely, but you don't need billions and billions of dollars to solve a problem. You don't need that. What you need, if somebody's building it for US, Europe, or globally, fair enough, but to navigate certain countries, like for example India, to navigate to have a product, let's say in the US, and bring it to India and expecting it to work is just not going to happen, right? Because it is a completely different country. The culture is completely different. The people are different. The local laws, regulations, how the working style is completely different. So our uniqueness comes in that we know how to navigate the local landscape. I'm not born and brought up in a country like India, but I understand the country. We understand countries like Egypt. We understand countries like Nigeria. We've been there ourselves. We visited these countries. We understand the local landscape, what can be done, what can't be done. And you can't just throw money at that problem. We've always been competing against organizations that have had much more money than us, but we've been competing quite successfully as well. We have been successful because of the ethos of just solving a problem. Our solution works, our product set is good, but you just make it nice and simple. Sometimes a lot of organizations you've seen in the last maybe at least 5 years where money is being spent. A lot of money has been spent. Let's say, for example, we're scaling up and getting a lot of people, then a lot of people let go at the same time as well, right? So I'm not saying one way of working is correct and one way is not correct. I can only talk about what has been successful for us, and that's not to say that we may not go that route in the future as well. So what we've done so far up to this stage, I'm proud of, and we are competing against these guys, for sure. But that's part of the challenge, isn't it?
Yeah, absolutely. So you just mentioned skill, and I think that's probably a topic that I want to dive in a little bit more, because just like I mentioned, there's multiple networks, multiple companies as well trying to build that and already processing billions of dollars, but then have large capital gaps, have raised a lot of money. You've done it all with your own money. And the truth of the matter is that skill oftentimes only wins when you have better pricing, more leverage, or more resilience. However, in this case, it doesn't seem to be like that, because you're using tenacity, grit, local knowledge as well. What do you think sets PayFuture apart from all of those other companies who've already been on this journey or continue to be on this journey?
Yeah, look, we don't look at other organizations. If they're doing this, we don't really look at them and see, what, look at them as competition. We have to look at ourselves and see what we can do better. Our whole business model is built on the blue ocean strategy. Now, the blue ocean strategy is basically, you have the red ocean. The red ocean is where you have sharks fighting over the same piece of meat, and you're competing on price, for example. That's not a good race to the top. Or you have a completely separate ocean for yourself as a shark, and you have the whole ocean to feed off. So our ethos has always been the blue ocean. How can we be blue ocean? How can we be different? If we can't spend hundreds of millions or even billions of dollars, we shouldn't even be looking at stuff like that. What can we do within our realm to make us successful? So we've always had the ethos, but what it is, we haven't gone crazy in terms of the number of people that we have as well. We still have a relevantly small team, and they look at their departments and make sure that we have simple things that just work. When you get larger and larger, when you're talking about scale is often lost when you can't really see what the person on the actual floor is doing day in day out. You have to make sure that they're doing their job as maximum level as possible. This is something that when you have small amounts of people, you can see, what the output is from each individual. And an organization like us that hasn't got these kind of funds, those guys are very important. Our team is very important. You don't get to where you get to without the team. The guys around you have to be good. And that's what we got at the moment. And yeah, this is up to this point. This is what has led to us being where we are now. And scaling always starts with the people. Always starts with very, very good people. If you have good people, it becomes easier to scale. Now, the hiring process is where every company makes mistakes. Every company also gets champions in terms of their team in order to scale up as well. So it comes with people. Scaling comes with people. You have your systems, you have your process, fair enough, but it's the people is what drives that, and that's important. But we can't compete against having 5,000 people. This is not something that we can do. So for us, we have to look at it as a completely different approach.
Absolutely. I think especially a couple of things that you mentioned, the blue ocean strategy, which I think is probably one of the best strategies that you can deploy, especially in markets where it's oversaturated. There's too much competition. There's competition based on pricing, and also a lot of legacy infrastructure, right? Like a lot of the problems you're solving, there's legacy infrastructure in place which are actually orchestrating around different routes and going into those markets. But if you would describe that blue ocean, what is that blue ocean that you see that others might not?
Good question. A blue ocean always starts with an idea of what we can do. What is being used at the moment? What are people doing? For example, you mentioned legacy. Legacy, for anyone trying to do a blue ocean strategy, legacy is a very important word. If somebody is working on legacy products, or just Swift is a perfect example of that, right? If you look at that, that's easy to build your blue ocean from what's legacy, what can we make that is more quicker, faster, what adds value, so we build our own ocean there. But not just blue ocean from the beginning. A blue ocean needs to keep evolving as well. You can't just have blue ocean and then think, okay, that's it then. The other people will start doing what you're doing as well. So the blue ocean needs to keep evolving. It needs to keep moving faster. We as an organization, we were technology always before. Then we got our EMI out of Malta, so we involved in the flow of funds, and our blue ocean changed then because we can do something different. Now we have our VASP licenses in Canada, etc. So our blue ocean changes as well because you have more leverage to do certain different things as well. So it has to keep evolving. You can't just have one blue ocean. I think that's it. When we first started, stablecoin wasn't really a thing. It's only come in probably more in the last 5 years from the start, and now it's obviously more prevalent now. But you have to look at that, and you have to then evolve. You have to change as well. The payments is fast, so you have to be fast with it. So that's how we do it here.
Absolutely. The other thing that you mentioned was the fact that you keep you have a relatively small team. I won't say a small team, a relatively small team, because you're working efficient and you know exactly which markets you're targeting. In this age of AI, right? Like we mentioned, we talked about companies who maybe have 5,000 people, 10,000 people that you're competing with. Are you leveraging AI right now to make your team even more efficient, or to execute faster, or to maybe generate more code so that you can build more integrations with others?
Yeah, the answer is yes. I think if any organization is not using AI, I don't know what they're doing, basically. In terms of your technology, in terms of your development, I think it has to be used. Now, whether it's 100% perfect all the time, I don't know. I don't think so. But it's okay. At least it saves you a lot of time. So you have to keep utilizing it. I think we spoke outside and we were saying if it's binary, then it's good. It needs to be utilized. It should be utilized. I even at our senior leadership team meetings as well, I emphasize that use AI. Why not? It's there for you to use. Use it. It's fine. But if you're asking AI for an opinion or, asking for something similar, then I don't think it's really at that level. This is what I think as well. Otherwise, everyone would have created a unicorn business in a few months, right? So where it's very black and white, where you can get things done, and whether that's finance, whether that's Excel sheets, whether that's making sure that your reconciliation, whether that's the tech guys, that 100% it has to be utilized. We do utilize it, but when you're asking it to do like a report for you and stuff, and it's just still AI, it's I don't know. I'm more. It's good. Just even.
Do you feel that your team is more efficient because they use AI, and that you can therefore scale farther without having to hire additional people?
Yeah, I mean, some of the products that we've utilized AI, and the speed at which we've got it has been unbelievable in the last few months, actually. So I have seen with my own eyes the benefit of it, but it's not just me doing it. I wouldn't say I'm an AI specialist. It's a team. Some of the guys are really, they're really into it, really study it hard, and they're the ones that are utilizing it. They're presented to somebody like myself, and it's hard not to get impressed by it, right? So even I tried to say to everyone, utilizing it in everything. Just do it. Just try it out. It may not even be correct. It may not be correct, but it's okay. If it saves you time and stuff, why not? Just try it out. It's not perfect. It will keep getting better though, won't it? So,
I want to go back into a topic that, of course, as PayFuture, you're probably very future optimistic as well. But some of the markets that you're in have very strict capital controls, precisely to stop money, and especially dollars leaving the country. You already mentioned that a couple of times. And a product whose whole point is actually to get easier access to digital dollars is basically in direct tension with those regulators who are trying to prevent those. How is this not something that a central bank can eventually shut down?
A good question. Like I mentioned Argentina before. So these kind of countries where there are hugely strict capital control, we try not to go in there. That's not a country for us. That's not a solution that we can do there. It will get shut down if you try to do anything against the rules, against the regulation. So we only go into countries where we can do something. you know some countries are very forward thinking in terms of their money movement, because currency fluctuations happens for a lot of reasons, but one of those reasons is money movement, that happens that there's no visibility on as well. So they have to put those controls in place to make sure that they protect their own country, to protect their local currency. But where there is a regulation, where some of these countries, emerging markets, are opening up, that's where we are. That's where we are. So, and we can see that countries will open up to it as well. When they can see certain countries opening up to it and be successful, then you'll see other countries opening up to it as well, where it won't affect the local currency. So this is something for each government, obviously each central bank, but a lot of countries are quite forward thinking with this sort of thing now. You'll be surprised as to the last 5 years what changes have actually taken place. A lot of countries are opening up regulation in terms of like stablecoin. For example, I mentioned India with the FIU, even other countries as well are opening up to stablecoin as well. So where we can, maybe utilize fiat, where we can maybe utilize stablecoin, we can do it. Where we can't, then what can you do? There's no solution really at that point. So we have to hold our hands up, say, look, it's not ready yet. Even though the merchants, the businesses all ask for these countries, you say, look, we can't, that's not a country we can do, unfortunately. So what we can do, we do. What we can't do, we have to stay away from.
Absolutely. So when we look at in the sort of where payments is headed, where merchants are headed, a lot of these new emerging markets actually have a lot of great potential and upside as well. But maybe from your perspective, as you're dealing with your clients, as you're dealing with the merchants that you're working with, what are you seeing that others might not be seeing as far as where global cross-border e-commerce and this overall commerce is headed?
Yeah, because what it is, like, it's commerce is you have within country commerce, where production, sell, whether it's a service, whether it's a product they sell within their ecosystem. But a lot of the times, those people who are creating those services, creating those products, etc., they want to sell to different countries outside, right? Now, the challenge then happens is that how do they get paid? What is the process of being paid in a regulated, compliant manner, right? So we can see that that's an issue, right? Not because we do loads of analysis on this, etc. That's not the case. It's simply what businesses tell us that they need. The requirement is within country as well. Global commerce is increasing, and it will keep increasing because we're solving that problem of the money movement. Now, when you look at social apps, when you look at the internet, it's all global, but money isn't. So there's still borders, but people want to sell to everyone. So how do you solve that problem? This is still something that needs to get solved in certain countries. Like a country like Africa, they're seeing a massive boom in certain countries there because money's able to move a lot freer now. You're seeing this. A lot of countries are really getting bigger in terms of their economies and stuff. One of the prime countries we talk about here is Nigeria. Nigeria's the economy is doing very, very well because they're able to people are able to pay, etc. So this is still an issue, right? But if it wasn't an issue, then we wouldn't have a business, right? So this is what we try to solve for. And I mentioned so many times solving a problem. But that's what it is. This is still an issue which we're trying to make sure that we can help with, right? So that in terms of insights, yeah, there's loads of buzzwords. You mentioned AI, there was more AI buzzword before last year, but it's quite simple issues that we're trying to alleviate. These are not complex. So that's a kind of we're seeing like a trend of this. Every country is trying to do their best in terms of getting more business from different countries, etc. So in order to do that, borders will have to open up. That's how you get global commerce to where it needs to get to.
Absolutely. So as my final question, I always ask my guests, right? There's a lot of future optimistic things that we look forward to. Indeed, it doesn't matter if it's AI, agentic commerce, all of those different things, stable coins, fantastic. However, sometimes we have roadblocks as well. So what is one of those roadblocks? It could be compliance related, regulatory related, stablecoins acceptance, you name it, that you believe that we need to resolve so that we can maybe encourage more global commerce or that PayFuture can continue to grow.
Yeah, I mentioned it before. It's compliance, it's regulation, right? But that will come. That will come. Look, we even do go to certain countries. We speak to central banks ourselves. We speak about this. We speak about how it can benefit their country, how getting certain legislation can help them. We have that. I have the conversations, and my co-founder has those conversations with them as well, and they're open to listen to you. Because who doesn't want more business for their country? Who doesn't want their country to do better? Everyone wants that. So that's you're gonna see this trend will change. This trend of before, I mean, even 3 years ago, even maybe 2 years ago, the word crypto was like, oh, I'm not sure about that. It's with the Genius Act, everything changed. Last year it was opened up a lot of opportunity, and that will be the next trend. You see a lot of countries will open up to this, to make sure that they do the best for their countries. And so this was, from my point of view, I don't know too much about how AI is going to do, or whether rockets are going to go to Mars, etc. That's not for me to talk about. I can only talk about what interests me and what we're doing is like, and that will open up. Certain countries will open up more to cross-border money movement. You need speed. You need it to be fast. Nobody wants to wait, months for their money, right? The cash flow is very important for their economies, for businesses to do better. Entrepreneurs are what makes a country be successful or not successful. So if you can help them as much as possible, that trend will definitely happen. It's a good trend as well. It will help organizations. Look, we only go into difficult countries, where we can try to look at it and try to solve a problem. That's what we actually do. So it will continue. So we'll continue that is going to be a trend, but we'll continue to make sure that we offer benefit to businesses that try to go into these countries.
Perfect. Well, thank you very much for joining us here at Executive Conversation. It was a pleasure to speak to you. See you soon.
Brilliant. Thank you very much.
Thank you. If you like this episode, hit like, follow, and subscribe for more.